I was speaking to a good friend of mine who's a kind of very well-known hedge fund manager, or ex-hedge fund manager, and one of the billionaire crowd. And he's like, Raoul, when do you think Bitcoin hits 100,000? I said, probably the summer, with the kind of demand and the ETF. Kind of feels like sometime in the summer. He's like, so much wealth is getting made in crypto. It's making the billionaire class.
Wait a minute, everyone. Welcome to Bitcoinzilla, your platform for daily cryptocurrency analysis and news. Our mission is to keep it simple. Bitcoinzilla offers engaging information that is easy to understand. Our analysts keep their eyes on the latest news to provide valuable insights via email. Don't miss out on this opportunity. Join our community of 10,000 subscribers and experience the new edge with Bitcoinzilla. Subscribe now. In today's video, Raoul Pal dives deep into the future adoption of the Bitcoin network, the US dollar inflation, and what is fueling the Bitcoin bull market. Raoul also shared his prediction for Bitcoin in 2024 and what he thinks about the Bitcoin halving. So without wasting any time, let's dive into the video.
This is all driven by the liquidity cycle. It's actually a macro cycle driven by the refinancing of government debts, because everybody reset interest rates to zero in 2008. They set their government debts all at 3 to 5 years, gives us a 4-year cycle. That was the exact point, the launch of Bitcoin. It's also the US presidential election cycle. It's all the same thing. And election cycles, they give out candy to the kids, which is their way of stimulating. So it's all part of this stimulus cycle and debt refi cycle. So I don't think that changes, because the debt issue is still too big. Okay, so what is the nuance of the cycle? Normally, we've only got 3 data points, but the crypto spring, which is the first year after the bear market, this has been a strong one. Bitcoin was up 150%, whatever. So that's pretty strong because we brought an extra source of demand in, as you allude to with the ETF. But that actually came later, but it was front running by hedge funds and participants.
Us, yeah.
Crypto spring transitions to crypto summer, and that's usually happens after the halving. And after the halving, you see something that I know everybody's getting shit for right now, is if you go back to 2020, after the halving, what happened? ETH Bitcoin bottomed.
Right.
And then it slowly based, and then it started outperforming, right? That's when the market takes on risk and goes out the risk curve. And that's when you start to see Bitcoin dominance coming down, all of that kind of stuff. That's what the summer is. It's also altcoin season. It's when we hit what I commonly refer to as the banana zone, when everything goes bananas, right? The bit of crypto magic. Now, this banana zone is interesting to me because we've got this new source of demand. This is the most reflexive market ever, because the more people join the network, the more the price goes up. The more it encourages people to join the network, the more the price goes up. And obviously that reflexivity works in reverse, which is why we get strong bear markets. But basically, the world is underweight this asset because it's still a new asset and it's an adoption curve. So over time, more and more people join the network as investors or users. So I think we can see a second wave of panic into the Bitcoin ETF from people. I was speaking to a good friend of mine who's a kind of very well-known hedge fund manager, or ex-hedge fund manager, and one of the billionaire crowd. And he's like, Raoul, when do you think Bitcoin hits 100,000? I said, probably the summer, with the kind of demand and the ETF. Kind of feels like sometime in the summer. He's like, so much wealth is getting made in crypto. It's making the billionaire class nervous. I said, what are you talking about?
What?
And this was a lovely insight. He's like, okay, there's 2 groups here who all they care about, they're so rich, all they care about is where they fit on the rich table.
Despite the modest recovery to $63,500 on April 15, the overall sentiment among traders is dampened, making it challenging to support the narrative of Bitcoin as digital gold. Additionally, the price movement exposed weaknesses in the spot Bitcoin ETF, particularly as holders were unable to sell over the weekend. This situation demonstrated the limitations of indirect exposure to Bitcoin through such instruments. Recent inflows into spot ETF in the US have significantly influenced Bitcoin's price, even when accounting for outflows from Grayscale's GBTC. The sector has amassed $55 billion in assets under management over 3 months, bolstered by high-profile visits from sales teams at BlackRock, Fidelity, Bitwise, and VanEck to institutional clients and top asset managers. Gold's reputation as a store of value remains unchallenged, especially given its price stability during recent global political uncertainties and escalating conflicts in the Middle East. The metal is trading at $2,350, maintaining its level over the past week after reaching a $2,432 all-time high on April 12. Analyst Tom Lin suggests that recent price movements confirm investors do not view Bitcoin as a safe haven, in contrast to gold, which appreciated following news of military conflicts on April 12. However, this analysis may overlook the fact that gold markets not operate over the weekend, and other dynamics such as excessive leverage could have impacted Bitcoin's performance. Historical data reveals that the price actions of Bitcoin and gold are rarely synchronized. The correlation metric ranges from -1, indicating that select markets move in opposite directions, to +1, which signifies perfect and symmetrical movement. A score of 0 would represent a lack of any correlation between the two assets. The data underscores that Bitcoin is not correlated with gold, contradicting claims that the cryptocurrency has failed as a store of value. This highlights the advantage of possessing an asset that does not have a direct relationship with traditional financial assets.
That's what crypto summer is all about. It's the FOMO, the madness, the insanity that crypto becomes. But it also drives adoption, drives money into the VC again. It flushes money through the system, allows people to build new product, which is the next cycle's gains and all of this stuff. So that's great. And then we go into fall, and this is where the complications lie. Crypto fall, which we historically 2025, they've generally finished at the end of the year. We don't really ever know exactly. I think this cycle's maybe started a bit earlier. I don't know. And falls can be the most tricky part. This summer is the easy bit. You just shut up and do nothing. And number go up. Fall is tricky. So if you go back to 2013, we had a 50% sell-off. People thought it was done because it had already gone up, I don't know, 20x or something stupid. It then corrected 50%. Everyone thought it was over. And then it moon rocketed in just a way you can't comprehend. Then you get to 2017. Same. 2017, everyone kind of thought it was over, early summer. And then it did, I don't know, 10x from there. It was bananas, right? That is really hard to deal with because 2021 was a stunted cycle. We never got the accelerated final leg. We had the huge correction. It went up, poked his nose back up in the highs, collapsed. Everyone's got PTSD from that. The real money was made in those previous two bull markets in terms of percentage returns. Everyone now assumes it can only go up 3x from the all-time high. There is actually no evidence of that. Maybe something was weird in the last cycle because the other ones did a lot past the all-time highs.
Some analysts believe that Bitcoin is at the beginning of the pre-halving phase that historically follows a certain pattern. Similar to previous halvings, BTC's price appears to be following the 5 phases of the Bitcoin halving. The timing of the pre-halving drawdown comes 18 days before the expected Bitcoin halving date on April 20. An ex-social network post from crypto trader and independent analyst Rec Capital suggested that the ongoing price action is part of a pre-halving retrace, which has seen BTC dip 20% during the 2020 halving cycle. A sharp movement in the Bitcoin futures market can be noted by looking at liquidations. The timing of the long liquidations coincided with elevated volatility. In a 24-hour period on April 15, over $43.7 million of long positions were liquidated. Bitcoin long liquidations spiked within 4 hours to over $20.6 million on the same day. When BTC longs are liquidated without buying pressure from traders, Bitcoin price is negatively affected. Bitcoin trading volumes dropped over $24 billion from the March 5 year-to-date peak of $45 billion in daily activity. In addition to trading volume decreasing more than half from year-to-date highs, long-term holders are de-risking and profit-taking. The most recent buyers of Bitcoin seem to be short-term holders. Short-term holders, as a cohort, have the highest BTC supply since July 26, 2021, which may lead to the continued fall of Bitcoin prices. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.